You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
So it's a great relief for the company, and it's now going to allow us to aggressively move Kilgore forward from an exploration perspective without this cloud hanging over us. So we're very pleased with the result.
Welcome back to Mining Stock Education, ladies and gentlemen. I am your host, Bill Powers. Thank you for tuning in. Well, today we are going to be getting an update from one of our sponsors, Otis Gold Corp, and its CEO, Craig Lindsay. We last spoke with Craig at the Beaver Creek Conference in September, and a lot of positive news has come out regarding the company. When I was looking over the company's stock chart over the last few years, from about the end of summer in 2016 to the beginning of summer in 2018, Otis was trading in that 25 cent to 30 cent Canadian range. And then it took a dive, and there was some issue with its permit that was granted at its Kilgore project. There was some contesting with the U.S. Forest Service, not directly with Otis, but more with the Forest Service. And then that kind of confined the share price range to that 8 to 12 cent range for about the last year. But there's been a positive development that has just come out. So Craig is here to update us on that and talk about what that means for the project and for investors. Craig, welcome back to Mining Stock Education, and please share with us this update.
Hey, Bill, thanks a lot. I appreciate you having me on today. And thanks for that introduction. What you're referencing is yesterday afternoon, we received notice from the U.S. federal court in Boise, Idaho, that the lawsuit that was filed by an environmental group against the U.S. Forest Service in connection with their approval of our current exploration plan of operations out at our Kilgore Project in Idaho. This lawsuit was dismissed by the judge last night. So we've issued news on that, updating the market, and it's a great relief to the company, number one, but just as importantly for the Kilgore project itself, it significantly de-risks the project in that this lawsuit that's been hanging over the project and creating quite a bit of uncertainty amongst investors with respect to how we're going to be able to move the project forward has been removed. So it's a great relief for the company. It's a great relief for me personally, and it's now going to allow us to aggressively move Kilgore forward from an exploration perspective without this cloud hanging over us. So we're very pleased with the result.
The market responded positively to this announcement, and you were up about 17 or 18% on the day, but you're still about 1/3 of what you were a couple years ago, yet the project is more advanced. You put out a PEA a few months ago. Could you kind of bring us up to speed for those that haven't heard the story? What are some of the highlights of the PEA on the Kilgore project?
Sure. Well, firstly, just to remind people, Kilgore is located in southeastern Idaho. It's a volcanic-hosted epithermal gold system on the northeast margin of something called the Kilgore caldera. It's got an existing gold resource of just under 1 million ounces in both indicated and inferred categories. And we've taken that deposit and we've wrapped around a preliminary economic assessment around the project, and that's was announced back in August. And the good news on that is there's a 5-year mine life with production of about 110,000 ounces of gold a year, and at a $1,300 gold price, the net present value of this project after tax is $110 million US, and the IRR on that after tax is 34%. So extremely robust economics on the Kilgore project as it stands today. So when investors are looking at a company like Otis, we've got about a $17 million Canadian market cap, yet we're sitting on a project that's got an NPV of $110 million US, very strong economics, and nothing but growth potential beyond the existing deposit. And the growth potential of Kilgore, frankly, has been affirmed by third-party investors. Specifically, 2 years ago, Agnico Eagle Mines came in and bought just under 10% of the company at 35 cents a share Canadian. So at a significant premium to where we're trading at right now. And for those of your listeners who don't know Agnico Eagle, they're very well respected and large Canadian gold mining companies with global operations and are really regarded as one of the premier operators in the business. So to have their blessing in the form of a significant investment into our company has been a strong endorsement of the exploration potential that we see out at Kilgore.
Regarding that expansion potential, in October you mentioned that you were drilling 14 holes. Those holes were averaging approximately 230 meters in length. What can you share with us now? I know you don't have the assays back, but what can you share with us about the potential here?
Sure. Well, it was just a little program. We actually only got 11 holes down out of the 14 that were initially planned. They were reverse circulation holes. The average is about 230 meters in length. And the idea with this project was to do some step-out drilling off of the deposit to help to really help define the limits of the existing deposit and hopefully expand the deposit. So we're looking forward to getting some results back on that. They should be out in January. So that project took about 2 months to get those holes down. Major drilling out of Elko, Nevada, did the drilling for us. And they did a great job on the drilling. And yeah, we're looking forward to getting some news out on that in the new year.
And then that was the first phase of a larger drill program. What are the plans for Kilgore and also your Oakley project in 2020?
Kilgore itself, I mean, this little program that we did is really a base hit, using a baseball analogy. And we're looking for triples and doubles next year, maybe home runs, in that we're going to be knocking out in between 20 and 25,000 meters of drilling next year. So we've got 60 plus holes planned, and it's going to be not just step outs off of the deposit, but we next year are going to be looking for the second and third deposits that we think are out there at Kilgore. That's why Agnico put their money into the company. That's what investors should be excited about, is that the exploration potential above and beyond the 1 million ounces that we're sitting on right now. So next year is going to be an exciting year for this company. We've brought on a fellow by the name of Alan Roberts, who you've met before, Bill, but Alan's a great explorationist, very strong technical skills. He's run lots of large exploration programs, and he's exactly the type of guy that you need to run the type of program that we've got planned next year at Kilgore. So it's going to be a kind of a critical year, I think, next year in terms of the development cycle of the Kilgore project. So that's exciting. And then we've got a second project that you mentioned, Oakley. It's another gold project right on the border between Idaho and Utah, and it's just immediately north of a very well-known past-producing silver mine called the Vipont mine. What's exciting about Oakley, there is an existing 43-101 compliant resource of about 160,000 ounces. So we're not starting from zero. We have 100% interest in the project, very light royalties on it, and nothing but exploration potential out there. Alan's done a great job putting that project together in terms of doing a bunch of work on the ground, most of it soil and rock sampling, and that has identified a bunch of new target areas at Oakley. We've expanded the land position at Oakley quite significantly, and our plan for Oakley is to advance that likely via a joint venture. So we've been out marketing Oakley to potential partners over the past 6 months. We've got quite a bit of interest in the project, and I'm not in a position to announce anything on that at this point, but the plan is to joint venture it and use other people's money to advance Oakley.
So would the financing for next year possibly come coinciding with a potential announcement of a strategic partner?
That could be. Certainly, we'd like to get some of this good news out. We've got some good news out with the court case being resolved, number one. Number two, getting some drill results out and potentially getting some news out on wrapping a story around how we're planning to advance Oakley. Those three things, I think, are going to generate quite a bit of interest from a market perspective, and is going to allow us to finance ourselves. And generally, for your listeners, January, February, typically are very good months to finance in the gold space. There's a big show called the PDAC in Toronto at the beginning of March. And if you've spent any time around junior natural resource markets, you'll know that it's generally a fairly good idea if you're financing to get it done before PDAC. There's generally quite a bit of activity. In Vancouver, where I'm based, there's a show called Roundup in January, and pretty much everyone who's anyone in the industry is in town, and there's usually a lot of activity that happens around Roundup.
When you're financing, you're also issuing shares. Craig, one question I had from a listener is regarding your share structure. Currently, there is 175.4 million issued shares. Fully diluted shares comes in at 194.4 million. You've been around for about 10 years. Can you address your share structure, please?
And that's something I love to talk about, Bill. The fact that there are investors in the junior mining space are asking way better questions than they did 10 years ago. It's really good to see how well educated people are, and certainly share structure is a critical part of any company, and it's something investors should be looking at closely. And yeah, we've got 175 million shares issued and outstanding, and fully diluted about 194 million, as you stated. And some people think that's getting up to the top end of where you're comfortable with. One of the things that I can say to address that issue, and again, it's a great question, is the fact that our top 10 shareholders own 40% of the company, almost on the nose. So we've got a highly concentrated level of ownership in the company. You typically don't see that with juniors that have been around for 10 years. It's usually a much broader distribution of ownership. So some of those investors, and some of those investors are some of the best names that you'll want to find in the gold space. Specifically, I've mentioned Agnico Eagle. They own just under right now about just under 9% of the company. We've got a large shareholder, a high net worth individual in the UK that owns 14% of the company. Myself and another director own together over 10% of the company between the two of us. Van Eck Associates out of New York, a very well-known player in the gold space, owns just under 3% of the company. So we do have some good institutional shareholders. We've got strong sponsorship in the form of Agnico Eagle, and just as importantly, management directors and insiders own a large position in the company. And if you're an investor, one of the worst things, I shouldn't say the worst things, I want to retract that comment, but one of the things that I find most surprising is the companies that are led by boards and management that have very, very little ownership interest in the company. They typically will take their compensation in the form of their fees, and also in the form of options only. They don't have cold hard cash into the company, and our board and management does, and that's a real differentiator.
I believe, if I recall correctly from our previous conversation we've had, that this last financing you did with around $1 million, that was primarily people that currently own the company, wasn't it?
Yes, yeah, they were mostly almost all existing investors. We did have one fund out of Europe who participated in the last financing. That was a new investor. The rest of the folks were all existing investors topping up.
Well, there has been a little more excitement as of recent with the gold price and the junior gold stocks. You're in Vancouver and you're leading a junior gold company. What do you see from your vantage point, Craig?
Well, it's a good question, Bill. The last year has been, I was going to say, use strong language, but I won't. It's been really difficult for guys like me. Not just the past year, the past couple of years. It's been really, really soft in this space. The big markets have been rolling. I don't know what it is, but one of the things is, if I can earn 15 to 20% putting my money in, S&P 500 stuff, why would I put money into high risk junior stocks that, could go to zero? I mean, that's just the reality of it. That said, the price of gold has strengthened. So we're in that $1,450, $1,500 range US. That's generated a lot more interest in the gold space. We're starting to see M&A with the large cap gold companies and the mid cap. We've also seen some development company deals that have been announced. And so that is starting to demonstrate some revived interest in the gold space. And typically, the juniors are the last ones to start getting some joy or love from investors. So I think that's on the horizon. And I think there's generally just a lot more jump in people's step these days. People are excited about 2020. I think as a stock promoter, and at the end of the day, that's what I am, we all get excited about the prospect of a new year. But I truly think, we're fundamentally moving into a much stronger market for these junior companies such as Otis. And one of the things, another thing that investors really like, when they start taking flyers on some of these higher risk juniors, there's been a trend towards people investing in safer jurisdictions. And with Otis, you certainly have that. Our projects are in the U.S. Property ownership issues are almost nil. They're very friendly from a regulatory perspective. Mining is, it's well supported, particularly in the mining friendly states in the western part of the United States, where most of the exploration and development is done. So people like the jurisdiction that we're in. So, I think we're going to have a really exciting year, and we'll know soon enough because we're only a couple of weeks away from what I think is going to be a pretty exciting year for juniors.
Otis Gold's website is otisgold.com. The company trades on the Venture Exchange in Toronto under the ticker OOO, that's OOO, and in New York on the OTC under the ticker OGLDF. Well, Craig, thank you for this update, and I look forward to talking to you again when those results come back from your Kilgore holes. So we'll talk to you then.
Look forward to it. Thanks a lot, Bill. I appreciate you having me on.